Hey guys, and welcome to a new episode of Koshkah'S Academy of Trading. So today we're gonna do a trade breakdown on NZD USD that hit right here a 1-to-5 risk to reward ratio. And this is as well an interesting setup and an interesting trade because I personally made a mistake when I exited the position, and I'm gonna break it down too so you will not make the same mistake. So this is as well a trade that I took on my 4Traders prop firm account, as you can see exactly right here with the right entry and my partials, and it came back to break even as you can see right here. However, right here it hits 1-to-5, so this is the mistake that I made and I'm gonna go back on it a little bit later. But let's just first of all start with the breakdown to see how I catched this trade. So first things first, you need to go on the higher time frame, in this case on the 4-hour, to identify your structure and see what's going on. So let's go back a little bit in time, exactly right here, to identify our current structure. In this case, we were pretty much bullish as we were looking to go to the upside, but more recently we started to break structure to the downside right here and right here as well. So this was our last bullish range, but then this bullish range has been broken and we created this change of character to the downside slash market structure shift slash break of structure to the downside right here, and we created this bearish range. Then we had a little pullback close to 0.5% of the Fibonacci, and then we broke structure to the downside again. So now we have this bearish range and this new bearish range right here. So our structure is now bearish. We can look for some sells. So now what you're gonna do, you're gonna identify all your valid points of interest on those two ranges, again above the 0.5% of the Fibonacci. So first of all, I'm gonna start by identifying my POIs on that range, and then I'm gonna go above right here to see if there is anything else. In this case, we have a 4-hour POI exactly right here that is valid, but this 4-hour POI don't have any inducement. So this means that this POI is risky. So let's see if we have any other POIs above exactly right here. So on the 4-hour, we do have a 4-hour POI a little bit above there, and now there is nothing else. So when we did everything that we could on the 4-hour, let's go now on the 1-hour. So on the 1-hour time frame, exactly right here in the bottom there is nothing, but above right here we do have this 1-hour POI that was just above this 4-hour one, and now the high of this 4-hour POI is the liquidity and the inducement for the POI above. So this means that this 1-hour POI is strong, and same thing above right here we have as well this 4-hour POI, and same thing this 4-hour POI we do have some liquidity and inducement right here. So both of the POIs above are strong, but this POI is weak. So let's see what's going on. So as you can see, we completely destroyed this 4-hour POI, so it was expected, it was weak. The liquidity was situated above right here, so this is normal that this one got destroyed. But now we mitigated this 1-hour POI exactly right here, so you can go on the 15-minute to look for an entry confirmation. You're not gonna straight away look for a sell right here, because if you do so, you will get swept, and there is basically no thing that indicates you that right here it will react. You need to go on an intermediate time frame, in this case the 15-minute, to have a confirmation that this POI is strong enough and it will react. Right here, if you straight away entered at this 4-hour POI, you see you could have get completely destroyed. But if you waited for a 15-minute confirmation, you'll see that price actually never broke structure. When we broke structure right here, this is not a valid pullback, this is not a valid pullback, so this is the low we needed to break. Then we never broke here either, and then we just pushed to the upside and mitigated the one above. So we didn't have any confirmation at the POI below, so it was again another red flag that this POI won't hold. So this is why you need a 15-minute confirmation on the 15-minute before looking for an entry. Now, we tapped into this POI exactly right here, so we're gonna identify our last break of structure. This is our last break of structure to the upside, and we actually have even this one. So for now, this is the low we need to break. So let's see what's gonna happen next. Bam! Instead of breaking the low, we broke the high. So now this is the low we need to break. And as you can see, now we are outside of the POY on the 15-minute time frame. But this POY is not on the 15-minute time frame. This POY is on the 1 hour. And as you can see, on the 1 hour, we just swept the liquidity and we stayed inside. We closed inside the POY. So this POY is still valid as it closed inside the POY on the same time frame that the POY is. In this case, then, this is the low we needed to break now. So let's see what's gonna happen next. And bam, we broke through the low. Now I went a little bit fast, so let me just go back a little bit and bam. After this break of structure, we will need to identify our high and our low of the new range. In this case, this is the new high and this is the new low after the break of structure / change of character to the downside. And then we're gonna again identify our most extreme POY on the time frames. In this case, on the 15-minute there is nothing, so we can go on the 5 minutes. On the 5-minute there is nothing either, so we can go on the 1 minute. And on the 1 minute, if I go on top, we can see right here we have this extreme POY, this extreme opposite color candle before the end. So this is the most extreme POY, and we're just gonna be able to look for an entry right here. So you're gonna place your limit order right here at the POY. Your stop loss, really important, will be above the high, and you're gonna add a little bit of pips into your entry. Because if you place your stop loss too tight, you're gonna get swept, you're gonna get kicked out by spreads and other things that you don't want. So you're gonna add pretty much right here a few pips to your stop loss like this, and leave it enough space to breathe. When I say a little bit of pips, it's not here, guys. It's a little bit of pips, something like this. And for your entry as well, you're gonna add 1 pip always, because sometimes price came close to the POY without really tapping into it, so it's just like an extra caution. And your take profit 1 will be at 103 risk to reward ratio, exactly right here. And your take profit final, here this is where I made my mistake. I personally was too greedy for this trade. I personally targeted this overall low for a 1 to 10 risk to reward ratio. You see right here, I was really greedy. It was not necessary to target this low. A most conservative low was right here for 101.06, or even right here for 101.25. And in that case, this was way a better target. So for example, right here, it was still a 1 to 6, and it was not necessary to target more. And even your stop loss, it was a little bit higher right here to leave it even more room. So honestly, it was really not necessary to target the low right here, but that's what I did. I wanted a 1 to 9. Don't ask me why, it was a mistake. And this is why I got stopped out at break even afterwards with partials. But technically, this is the right low that you need to target, even this one if you want to be really 100% safe. So let's see what's going on. So price tapped really fast right here, straight away into the limit, as you can see. And if we target this low right here, that is the safest option. This is a 1 to 5 risk to reward ratio. We tapped into it, as you can see, and this is the moment where we just pushed up and came back to break even. So as you can see, I personally targeted this low. Even this low was still a 1 to 7. It's not even necessary 1 to 7. For me, 1 to 5, it's already a really good risk to reward ratio. So this is a really good example of if you're being too greedy, you're gonna get reversed on you. And this is why we're not targeting the extreme lows right here and try to catch huge moves. That doesn't make sense. You have way a bigger chance to just get stopped out at break even or just price reversing on you. So the best low available to target is always the closest one that still gives you a good risk to reward ratio, and that's it. A 1 to 5 is really good. You don't need more, and I was greedy, so don't make the same mistake. So as you can see, guys, if for example you targeted below, then price just came back to break even and you would be out with partials, and in this case this is how it happened to me. But if you were not greedy and you had a conservative take profit, you would have had a 1 to 5 risk to reward ratio without any problems. So that's it, guys. That was pretty much it for this quick breakdown on NZD USD. And don't make the same problem and don't make the same mistake of targeting way too far away for no valid reasons. And see you soon, guys. If you have any questions, don't hesitate to just comment them down below. Don't hesitate as well to like, share and subscribe to For Traders. And I have as well every single Saturday a free weekly outlook that this trade was exactly forecasted during the weekly outlook, with with the exact POIs, and it's completely free on 4Traders YouTube channel every single Saturday, so don't miss out.